5 tankers hit, zero insurance, oil at record highs, the Hormuz trap is now permanent. That's the kind of headline that doesn't want you informed. It wants you activated. Because it stacks 4 panic triggers in one breath: casualties, total insurance collapse, record prices, and the word permanent, which is basically a countdown with no end. So let's do this the adult way. In the next few minutes, I'm going to explain what's actually been reported about tanker attacks and insurance coverage in the Strait of Hormuz, why zero insurance is a real risk in narrow windows but not a forever state, what record highs really means in context, and the one question you should ask anytime someone tells you a global choke point is permanent. And I'll give you the mini payoff right now so you don't have to wait. The world doesn't need Hormuz to be closed forever to get crushed. It only needs Hormuz to become intermittently uninsurable and intermittently unsafe, just long enough to force reroutes, rationing behavior, and panic bidding for prompt barrels. That's what a trap looks like in 2026. Not a movie blockade, a risk premium that won't die. Now, what's actually happening? Multiple outlets are reporting that shipping through Hormuz has been heavily disrupted, with a large number of tankers holding position and crews stranded as the area becomes a conflict zone. The Guardian. There are also multiple reports of vessels being struck near or around the strait, and that the threat environment has escalated to the point where war risk cover is being canceled or suspended by parts of the marine insurance market, especially war risk extensions that owners rely on to operate in high-threat areas. Maritime Executive. And energy prices have reacted. Depending on the benchmark and the day, major outlets have described sharp moves higher driven by perceived disruption risk, especially as markets try to price what it means if Gulf flows are delayed or choked. Market Watch. So yes, this is real pressure, real disruption, real fear. But now let's address the 3 biggest manipulation points in that headline. First, 5 tankers hit. Have vessels been attacked? Yes, there's credible reporting of tanker attacks and incidents near the region. Yahoo Finance. But the exact number 5 is the kind of round, shareable number that tends to float around social media faster than verified tallies stabilize. What you should do is treat any exact number in the first 24 to 72 hours as fluid until multiple independent reports converge. Because in conflict zones, the first numbers are rarely the final numbers. Second, zero insurance. This one is important because it's the part that sounds dramatic, but can also be partially true in a very specific way. When you hear insurance is gone, it usually doesn't mean the entire insurance industry has vanished. It means one of 2 things. Either war risk cover is being suspended by key providers at the worst possible time, making it commercially irrational to transit, or premiums spike so fast that functionally, owners can't justify the voyage without passing costs into cargo and price. There is reporting that P&I clubs and war risk insurers have pulled back or suspended cover for Hormuz transits, and that tanker traffic has dropped extremely sharply as a result. Maritime Executive. So, zero insurance can be true in practice for certain ships, at certain times, under certain policy terms, but zero insurance forever is a different claim. Insurance markets are adaptive. If risk becomes priceable through escorts, routing, conditions, guarantees, or government backstops, coverage often reappears, just at a higher cost and with tighter conditions. Which brings us to the third manipulation point. Oil at record highs. Oil can spike hard and still not be at an all-time record. And headlines often use record loosely, meaning highest in a while, not highest ever. Recent reporting has described oil moving above key thresholds like $80 and rising to levels not seen in many months, driven by the conflict's impact on shipping risk. Market Watch. That is not the same as all-time record. But it's still a big deal, because the economic impact doesn't require an all-time record. It requires persistent elevation. Now the last phrase, the Hormuz trap is now permanent. This is where the headline crosses from reporting into storytelling, because permanent is a psychological weapon. It tries to convince you the system can't adapt. But here's the reality: the Strait of Hormuz is a trap whenever three forces overlap. 1. Physical threat to shipping. 2. An insurance and financing shock that makes transits commercially impossible. 3. A market that panics faster than governments can coordinate. And right now, we are seeing elements of all three. Maritime executive. Is that permanent? No one can responsibly promise that. But is it structurally sticky? That's the better word. Sticky means even after the first wave of fear fades, the risk premium doesn't fully leave. Owners remember, underwriters remember, crews remember, and cargo buyers start behaving differently. That's how choke points become chronic problems, not because they're always closed, because they're always one event away from becoming untradeable. Now, here's the key thing most people miss: oil supply doesn't collapse when oil stops being pumped. Oil supply collapses when oil stops being delivered. Production can be intact, storage can exist, but if tankers can't safely move, or can't obtain war risk cover, or can't crew up because seafarers refuse the route, then the market behaves like supply is missing. That's why you can get a global oil shock without a single refinery being destroyed. And there's reporting right now describing tanker backlogs, crews trapped in the region, and maritime traffic disruption severe enough to strand large volumes. The Guardian. So if you want to understand the Hormuz trap, you need to stop thinking in binary terms, open or closed. Start thinking in friction terms. How expensive is it to ship? How available is insurance? How long are delays? How many tankers are anchoring instead of transiting? Because those frictions are the real weapon. Now let me explain why this matters even if you live nowhere near the Gulf. Because global oil is priced on the margin. It's not just how much oil exists. It's how much oil can be delivered on time. When prompt deliveries feel threatened, refiners bid up nearby barrels. When nearby barrels get expensive, products get expensive. When products get expensive, inflation pressure rises. And when inflation pressure rises, central banks get trapped between growth risk and price stability. That's how a few ships and a choke point becomes a global financial shock. Now, what should you watch next? Not the loudest social post. 3 real-world signals. Signal 1. Shipping behavior. Are tankers consistently transiting again, or are they still stacking up outside the strait? There are reports of traffic collapsing and large numbers of ships holding position, and those patterns changing day to day will tell you more than any influencer headline. Maritime executive. Signal 2. Insurance behavior. Do war risk cancellations persist, or do underwriters return with extreme premiums and restrictions? If zero insurance becomes insurance, but at 10x the cost, that still keeps the trap alive, because now every delivered barrel includes a fear tax. Yahoo. Signal 3. Policy response. Do governments coordinate escorts, backstops, reserve releases, or emergency measures to keep flows moving? Because the moment the state steps into the market to keep shipping viable, you know private actors have judged the route too risky. That's not necessarily collapse, but it is escalation of economic intervention. Now here's the uncomfortable part. Even if shipping resumes, the trap can persist psychologically. Because once a region becomes a known no-go zone, the cost of capital rises for everyone operating there. Owners demand higher freight rates, insurers demand higher premiums, crews demand hazard pay or refuse. And every one of those costs flows downstream into prices you pay. So, permanent is too absolute. But this risk premium could stick around a long time is completely realistic. Now, I want to give you the one question that cuts through all the fear content. When someone says Hormuz is permanently trapped, ask, is the claim about physical closure or about uninsurability? Because physical closure is dramatic but rare. Uninsurability is quiet but powerful. And right now, the insurance story is one of the most important parts of the crisis, with multiple reports pointing to pulled cover and traffic collapse. Maritime executive. That's the hidden lever. Now let's land this cleanly. Have tankers been attacked and shipping disrupted? Yes, there is credible reporting of attacks and major disruption. Yahoo Finance. Has insurance pulled back in ways that can freeze transit? Yes, there is reporting that war risk cover has been canceled or suspended, contributing to a sharp drop in traffic. Maritime Executive. Has oil reacted sharply? Yes. Major outlets report meaningful price jumps linked to the conflict and perceived supply chain risk. Market Watch. Is the Hormuz trap permanent? That's the part you should treat as persuasion, not a verified fact. The smarter conclusion is this: the Hormuz trap becomes sticky when risk becomes hard to insure, hard to root around, and hard for policymakers to calm quickly. And we are in a moment where that stickiness is rising. Now I want your take. Do you think the real long-term damage here comes from physical attacks, or from the insurance and shipping fear tax that can linger long after the shooting pauses? Drop your answer.